Oh yes. Oh yes, legends. We are back. We are back. We'll be analyzing the situation here for the price of Bitcoin. Saying hello to the beautiful community. It's been over a week right now with no live stream. It is Thanksgiving today, so whoever's from the US, happy Thanksgiving today. Markets are closed, so I do expect a little bit of a quiet live stream, but we can discuss several scenarios for the price of Bitcoin all together here. And let me just quickly go straight into the comment section, guys, because it has been a week right now with no live stream. How is everybody doing? Hope you're doing absolutely fantastic. Hope you're doing good, guys. And yeah, let's just say hello to the beautiful community. Sorry about being late here, guys, because I was just getting everything ready here with the software. When I was trying to go live, it's suddenly some errors were starting to pop up. And it seemed like it was a little bit dusty for not using it in the last week. So anyway, you guys know that, I mean, the main reason why I wasn't doing any live or updates here on YouTube, guys, is because I got a strike. It seems like it's been going on throughout YouTube. Crypto YouTube content, you know, not everybody, but a lot of people have been getting some strikes. It seems like they had this AI automation that is detecting, I don't know, guys. I don't know. Price predictions. I have no idea. They haven't been clear on what's wrong, right? What's wrong, because I always want to know, hey, what can we do to improve, right? We don't want to mislead the people. And I can tell you there's a lot of misleading content out there. I'm here just to talk about resistance, support, right? Projections. I am wrong a lot of the times on projections that I feel that are in favor, that have higher probability. I'm right a lot of times as well, right? So you always need to take your own decisions and see if it fits with your own analysis. But yeah, what can we say, guys? It's been interesting. So anyway, I'm doing okay, guys. I'm all good. It's just you know, people were asking in the comment section from the previous video, what's going on? Where are you? I left a pinned comment. X is not too active. I left it on X, that, you know, just to let the people know that I got a strike. Created a secondary channel, which, you know, it's not really a solution, but overall, I think we're moving into a decentralized world. Okay. I've figured out a few different platforms which are not too active, but they will in the future, such as video creation. We know X is very powerful with censorship, and even decentralized platforms for trading as well. It's just which I am very much in favor of. Anyway, let's go through the comment section. We're here to talk about Bitcoin, guys. We are here to talk about Bitcoin. We are getting a bit of resistance here in the zone. You know what is funny right now? That, you know, I've been doing this since 2017. I've been on YouTube since 2020. And I know most of the big, you know, big-ish medium channels out there. And, you know, a lot of people talk about the same thing, right? A lot of people talk about the same thing, which obviously worries me. There's too many eyes on the same scenarios, right? So you always need to have that edge on, you know, thinking a little bit different. And I've got a few scenarios levels that I want to talk about. Anyway, let's say hello to the beautiful community, okay? Much love to everybody. Andy, my man, I'm happy you're back. I'm very happy as well. It's been quite boring. You know, I've been doing my stuff. I've got other stuff that I'm doing as well, other things, okay? I'm not going to go too much into detail, but yeah, I've missed kind of doing the live streams, the routine, right, of doing the updates and live streams, which I kind of enjoy very much. So anyway, a breakout will blow my mind. Exactly, right? There is a chance of a breakout. Chances are less probable, but who knows, right? We're going to discuss the bullish and the bearish case. You know, levels that I wouldn't be interested in being in me personally, either in a short or in a long. You know, I can share my trades. I can share how I'm positioning, how I'm looking for these setups, okay? I don't like to share my stuff, but obviously you need to share your trades as well, right? Kind of to make it legit. I just want to do the analysis. You take the decision, and then, hey, do you take this trade or not? I took it. Yes. Okay. Right. Kind of thing. I don't like flashing and bragging. Look at my profits and the other, because it's none of your business, right? It's none of my business what you make or what you don't make, right? So anyway, I can share with you, okay? And I can share how I want to position myself. What do I want to see next? On the previous video, which the one that I made today that didn't get any attention at all, guys, obviously after 7 days without posting, but I'm interested in double tops here, right? I'm interested in double tops. I'm interested in getting into double top. Be protective. If you take out the local highs, I'm interested in another, triple top in this zone. I know how to position myself, where to put stop loss. That's what I am interested in here, purely based on the resistance that there is. And of course, as there's going to be a lot of, shorts trying to enter this area, and we are still in bullish momentum, your best chance to try and catch the high before seeing a sign of weakness, right? Because here you either, look for sign of weakness on the very low time frame. You like on the 5 minute, 1 minute to like really kind of sniper the lowish kind of zone, or you wait for a rally, a bit of clear corrective structure. This is also kind of clear corrective once you get this price action. And this is also, quite sideways, clear corrective environment, right? There's nothing bearish about this move when you get this information. So, you got a little bit of room here to enter some longs after this price action. So unless you're going to wait for the movement down and the choppiness, price action here to really say, okay, this is corrective, we're looking for a leg down, right? And to position yourself, for me, the only way is if we do have higher time frame confluence here and analyzing the internal waves. If I want to catch the high, I'm looking for double, triple top scenarios, right? Especially going through the lower time frame waves here and understanding that we could take out the high again, right? So I want to go a little bit in detail on how I want to reposition myself. If the local highs are hit, we could break them, right? And this is where your risk management comes into place, right? My risk management, I kind of don't know how to use the wording right now. I need to talk about me, about myself, right? No financial advice eventually, okay? There is a big, down below in the description, there's a big disclaimer, right? That nothing, provided here is financial advice, and, it's just educational content, okay? So we need to get a bit of my wording right here. If you're a legit follower, you do know that, it's... Who cares, right? It's my analysis, my projections. But sometimes maybe my wording, I'm like, yes, this, that, the other, right? And then maybe it could be misleading. I do acknowledge that maybe I need to learn a little bit more of my wording, right? It can be misleading. Maybe I need YouTube to tell me, hey, you are doing this, so you can't do it. Okay, perfect. Then I won't do it, right? But yeah, they've given no clarity whatsoever. So what can we do? What can we do? Anyway, let's say hello to the beautiful community. We'll break down here the different scenarios, okay, legends? And yeah, we'll just go through the analysis here on the price of Bitcoin. Let's turn that music down. It's Thursday still. Let's say hello to Suzanne. Hello, Suzanne. How are you doing? Just making some coffee and tea because I want both. Too cold today. Much love to you. Spanish timing. Very true. It is Spanish timing, my man. Sol pumping. Solana is pumping. SPSC, new meme. Well, backed by Trump, says Edward here. Not sure. We're back in action. F YouTube, yeah. Staffer One, my man. Much love to you, brother. Okay. Thanks for joining. Staffer One, king moderator for the moment. All right, much love to you, brother. Thanks for joining. Slap the like button ever so slightly, and leave your comments. Leave your comments afterwards on the stream. Press the like, D Johnny. So good to see you again, Collins. Good to see you, man. It's been a long week. Why the big names get away with worse? it is what it is, right? It is what it is. I think they do have quite a bit of power also on different socials. I'm mainly focused on YouTube. You know, I haven't got, you know, I'm not posting Bitcoin technical analysis on Instagram, right? So, you know, I haven't got power on these different other, you know, I'm not doing Bitcoin TA on Facebook. You know, it's mainly YouTube, right? Video, live stream. I know that you can do live streams on Facebook and, you know, Instagram eventually, but it's just not the platform. It's not the audience, right? It's mainly YouTube for this kind of audience. So anyway, absolutely 100, just why you took it, what you were looking for when entering and exit. Okay, the legend is back, full port, much love. You are top. Thank you, Colin. Much love to you. Do you have any crypto cards? Crypto cards? No. Why have you not been active on VIP Telegram? Yeah, the thing about Telegram as well, I haven't been getting some nice messages. And, you know, this is the thing. I'm not here. I'm just here to provide the education, a little bit of what I'm doing. And, you know, just basically on YouTube. And you have to take your own decisions. You know, there's a lot of people out there that are not too nice, and you know, I don't need that. I don't need that. Welcome back, Andy. Ready for some great teaching. Much love to you. Okay. Yeah, as you can see, I'm not having the Telegram down below at the moment. You know, just not been having a great experience. People are, you know, there's some people out there that are nasty, and I don't need that. I don't need that. Okay, so. Anyway, that's one of the reasons as well. Much love to you, Staffer, okay? Much love. Let's go right away. Facebook needs serious stuff. I was trying to make content for it. I think on Facebook, most crypto channels are too much focused on memes and being funny. Yeah. Chin up, Andy. Absolutely, chin up. Let's go right away, guys, and see what's going on here with the price of Bitcoin. So, we ain't going to talk about the 4-year cycle theory. We ain't going to talk about, you know, do we hit new all-time highs, the bull run over? You know, if this cycle has been different. You know, usually it tops out in Q4. Bitcoin tops out in Q4 of the 4-year cycle theory. We topped out in October. Throughout this price action, we really need to adapt to what's happening locally. I personally sold 25% of my entire Bitcoin, okay? About 20% of Ethereum on spot bag. I am happy with what I have in cash. You know, if we were to go to all-time high, I would consider, you know, selling more spot. If we go down below $70,000, I would consider maybe buying. You know, spot is just there like for the long term, right? It's just like buying real estate or gold. I'm not looking at the price every day. You know, try to focus with what we got in cash to do a little bit of trading, see if we can make some gains at the end of the month. So the thing about higher time frame, yeah, of course we can hit all-time high in the next coming months. Yeah, of course we could break down below $50,000, right? We need to really focus on how we came down here from all-time high, okay? And this is the main movement that I'm interested in. And of course, the local movements as well. The more local movements, and try and spot where's the highest volume, where's the highest resistance. And what I want to do personally is position myself in either longs and shorts, you know, and kind of hedge, take profits on longs and take profits on shorts, you know, me personally. And I do still hold most of my Bitcoin. I would say, since, you know, from most of my buying of 2022 and 2023, which is where I accumulated most of my Bitcoin. Because, I mean, I've been buying Bitcoin since 2018, but it wasn't that many. I bought more in 22 and 23, just because I had more capital eventually. But, you know, it's a long-term thing. This thing about Bitcoin, you know, I would ride the Bitcoin holds that I have down to $50,000, $40,000. You know, that's totally fine. It's a long-term thing. It's like real estate. You don't buy real estate, you know, and suddenly it goes up 20-30% and you want to sell it, because obviously I see it as long-term anyway, my spot bags. And what I'm interested is intraday swing trading scenarios to see if I can personally scratch some dollars off the market, right? So And that's what we try and teach here. So obviously in an educational way. Let's go through. So I'm mainly interested in this movement down, guys. Okay, we'll break down here the most important levels of resistance and support, and we'll go through the Elliott wave scenarios. Okay, man, I don't know what's going on here with Tradingview as well, not playing ball. And we'll break down here the Elliott wave scenarios, most importantly, considering the volume. And it's pretty obvious that we have a resistance area right now. We got a few anchored VWAPs that are coming down from major pivot lower highs. I've only got 3 of them. Remember, anchored VWAPs, they need to be, you got it on the left, okay, right over here, anchored VWAP. Obviously, you need the premium on TradingView. It's been Black Friday. Well, it is Black Friday still. And TradingView has a massive discount of 70% for premium, which is great. It's insane. You pay the year, I think it's about $200 or so, or something like that. I paid it last week. And yeah, you just basically get premium at a 70% discount on Black Friday. And that's what I do every single year, just to get anchored VWAP and, session volume profile, I think, and a few more perks. You can have 7 or 8 charts open at the same time and stuff like that, right? So yeah, take advantage, guys, of Black Friday on TradingView. For that, anybody that doesn't know, I know a lot of you do know already, but it's just a great deal. So yeah, if anybody that didn't know, you got that right now going on TradingView, which is, I think, an awesome deal, right? It's not like a 10% or a 20%. 70% is something to take without a doubt. Let's go right away through, the levels of resistance. Let's go levels. Let's talk about levels right now. And let's just talk about the levels that we do have. Anchored VWAP is always a great level, okay? Volume weighted average price from a major trend when you anchor the VWAP from a major pivot, okay? Lower high or a major pivot higher low always, right? I got one right over there. Guess what? This anchored VWAP is from many months ago, and we actually tapped it, guys. Look at this. There's an anchored VWAP here from a major pivot high low, and this anchored VWAP is great to have as confluence. You add it as confluence to other tools, right, and levels that you have on the chart. So let's just take a look at this anchored VWAP. It's like, hang on a minute, where's that anchored VWAP coming from, right? Damn, it touched it basically to the dollar and got a bounce. And anchored VWAP has to be taken from major pivot lower highs or higher lows, right? You got the lows of the bear market, you got this low right over here, major higher low, this one right over here. You could arguably discuss getting this one right over here as well. So major pivot higher lows, and this major pivot higher low right there after the rally that we got here from the ETF. This was when ETF was launched, right, in the US, a spot Bitcoin ETF in late 2023, early 2024. And that major pivot higher low is important, and that anchored VWAP is the one that got respected right over here. Okay, so just wanted to point that out, right? Major pivot higher lows and major pivot lower highs on the higher time frame to get that anchored VWAP. And right now we are testing one, right, as resistance. It's fine to close a daily candle or a 4-hourly candle above it. It doesn't really matter. But what I want to explain here is that we do have a weekly naked point of control as well, which we're kind of trading slightly above it. We're going to take into consideration the shorts entering as well, because on Bybit, there's been 20 million short positions entering a few hours ago. And, there's people wanting to short this 90K zone. It's more interesting. Bitcoin's getting a little bit of a pump at the moment. It's more interesting to get the, people getting into longs up here. You want to see people longing, right? So they can create that liquidity to the downside, not people shorting. Okay. that, you know, it's just creating, you know, a strong trend to the upside, right? It's creating that liquidity so the momentum could continue to the upside. So these are little things that you want to take into consideration, right? This is obviously looking at the delta, and you know, it's just here we did get a few hours ago, you know, almost 20 million short positions entering here at this 90k area. So the thing is here, not sure if you can see this properly. Is it fit in properly? I'm just seeing if it's cropped properly with the live stream. I can see you can't see the lower numbers basically. Yeah, you got 19 million, you can see it there. I'm just checking on the software here. You can see this obviously as well on the CVD divergence. All right, you can see this on CVD. This is the yellow, this is Bybit right there. US dollar perpetual, you've got a big movement down here on Bybit with lots of shorts entering the market, right? Which is now we're getting a little bit of an automatic rally. I don't like to see that, if I'm honest. You know, if you do not short the high, you know, if I did not get into a, you know, the highs here on a double top, I don't want to short this movement down, right? If you, in this kind of price action, if you get a small leg to the downside, you know, and it could be just a little bull flag, right? I don't want to short down here. That is for sure. I'm not going to short down here. If I did miss shorting the highs, I am not going to short anywhere in this zone if we're going to create some choppiness, because I'm aware of the highs being hit and I don't know if it's going to be broken and you know, it's going to break or not. If I want to get into a short after a sign of weakness, you know, we need to see the movement down and then the choppiness in this range. Then I would say, okay, you know, if you didn't short here, then, you know, you know, if I didn't short here, I'm probably going to short in this zone, right? Once I get the weakness, if I didn't catch the double, triple top area. So, and it's important taking a look at this data, CVD, looking at the delta, just to see if there's too many shorts entering right there on the rollover. It's just not, it's never good news. Well, never. Most of the times it's not good news. It means that there's a good chance that you can sweep the local highs. It's just not an area that I would want to position myself. So anyway, going through the resistance and support levels, you know, we're talking about resistance right now. That anchored VWAP from the lower high of the 11th of November. That's, you know, one thing. Yeah, it's trading above it, below it. It's getting a reaction, right? It's not an exact level. Sometimes you touch it to the dollar. Sometimes you chop around it, which is the case right now. We do have a weekly naked point of control. Now, this weekly naked point of control is from this range right over here. And we you know, we are trading slightly below it, getting a reaction today. If you take, for example, anybody that is, you know, interested in saying, you know, how did you get that weekly naked point of control? How can we get it? There's other more advanced platforms such as Atos, you know, even Exo charts that would give you a little bit of a more accurate volume profile point of control. But it's just as good as using the volume profile here on Tradingview. Fixed volume profile, right? Where you just get the fixed volume profile here on the left, and you take Monday, last Monday, the 17th of November's price action to, you know, Monday of this week, right, in this area. And that gives you a high volume node. So that's the previous week naked point of control, which is, this is the reason why, you know, one of the reasons why the price is, you know, getting a reaction, right? This is what we say as a reaction, right? It did not continue the momentum to the upside, right? It did not continue the momentum, and it's getting a reaction. The price stopped here at this $91,000 range. And, you know, the reasons being, well, you got anchored VWAP from this lower high, major pivot lower high from the 11th of November. You got the previous week naked point of control. When we do take a look at Fibonacci, we also have the 382 Fibonacci, which we are trading slightly above. But when we talk about higher time frame Fibonacci, it's a major zone. You know, I would say it's a zone. It doesn't have to tap to the dollar, the Fibonacci area, because when we speculate on this zone potentially forming a wave 4, potentially, right? Maybe. I don't know. It's analysis at the end of the day. It's trying to project something that could happen. At the end of the day, we could blast off. If there's going to be millions of shorts entering the market here because everybody has the same point of view and analysis, it might just rip here, right? It might just rip because everybody's, or most of the people are bearish and looking for another lower high here at this $90,000 to $94,000 range. Because everybody's wanting, sees a lower high on the formation here and is entering short positions. We've got platforms that are telling us that there are people shorting. It might not roll over, right? You need to take it into consideration. So the thing is, with this data, with this information that we get after this movement down of a couple of $1,000s from the recent highs, there's no way in a million years that I would want to short down here at the low 90k levels. No way. If I did not enter the double top, okay, if I did not enter the local double top here, which is a great entry, in today's video, I give these little hints. I'm interested in double, triple tops. I think we were trading somewhere in this range. I was saying, maybe we range, maybe we take out the highs, maybe we'll double top. And I'm interested in entering in that position. And I will explain a little bit, looking at Elliot wave theory on this movement, to really say it's interesting here at this point to look for double tops, because not every double top is great, right? This pivot right over here is not a great double top. It can double top, but I would probably miss this double top. And price really broke through. It's not a great double top scenario, and I can explain that right away. If you have this structure to the upside, there's only a couple of scenarios that you really have, that you really have based on Elliott wave theory, because you have this movement up, down, move up, down, move up, down. What can you have with this momentum on the next wave, right? What are the different possibilities? The most bullish one is, blasting out in a third wave, creating a 4-5, 4 and 5, and the momentum just continues. Because of this structure, I understand, okay, this could break out in a third wave. Right? And it's not that interesting for me to get into a double top here. And this is one of the reasons why, right? Not every double, or not every bottom or every top locally is a good double top or a double bottom, right? And obviously with experience, you just realize that if it double tops here, I would rather miss the trade. We'll get new information tomorrow, and there might be a nice little scalp or day trade later on. So you don't need to catch every single trade or catch every single high. Best case scenario eventually is looking for the sign of weakness. Whenever that happens, get that nice movement down, and then obviously get the choppiness as a corrective structure and try to joining later on, unless you catch the double, triple tops in this area, which are very interesting. And we'll break it down now in the next coming minutes. But just giving that explanation, because at the end of the day, you are here to learn. You are here to not be here anymore in the next coming months, guys. The end goal, I know you like, maybe the people that do stay consistently is because maybe they're still learning and they still obviously they like the information. But at the end of the day, when you know something, you end up not following anybody. You do your own analysis. I don't watch anybody. Sometimes I like to take a look at analytics. Benjamin Cowan is cool because he talks about, is a very analytic guy, and the data is things that I don't use very much. And it's, interesting, right, to see. But based on technical analysis, there is a point that you don't follow anybody anymore, because you have all of the information, and you know how the price moves. you know, basically with the knowledge that you have. So, and I just wanted to explain why this, you know, basically is just not a good double top, right? Because you have the bullish case scenario, which is multiple 1-2s, and you always need to be aware, even though I like the bearish case to top out in this zone, you always need to have a bullish projection, right? Or a bearish projection if you're feeling bullish. Always, you know, right? You stay on the defensive side because, you know, there's nothing worse than, you know, having a good, you know, trading few weeks or few months, right? And suddenly you think that you are the king, right? That's happened to me many, many times when you're in the zone for many, many weeks. And it's like, man, I'm absolutely killing it. The price is going to do this, it's going to do that. And then you like feel invincible because you're reading the market like to the T. There's always going to be that moment that you're going to have a bigger projection against you, right? Which you kind of don't expect. So this is why we talk about, what if the price is, this is a multiple 1-2, you're forming a third wave right now. And the third wave, okay, it wasn't that explosive, but then suddenly you create an extensive fifth wave and then another extension fifth wave. And then it's like, hang on a minute, you know, it is definitely possible. Why not? Volume starts increasing as the price hits the highs. So, you know, this is why you need to be defensive and know exactly where you enter and where you do not want to participate, right, in a short. You know, don't worry about me. I'm worried about more people that are, you know, just take positions and go to sleep and then hope for the best, right? Because you know, in the past I've been getting DMs of many people saying, you know, I'm underwater, what should I do? And I'm like, well, it's just, you shouldn't be in the position straight away, right? So that's one scenario that, you know, the most bullish one, I have it here, where you have multiple 1-2s and you're just developing here the third wave, right? It's just building up 1-2, 1-2, 1-2, and then you're breaking still the highs. Why not create 4-5s? You got the biggest amount of volume in this area. As long as you do not take out this low, then you know that a quadruple 1-2 is not common, especially if you have the largest wave. Then that would, you know, this would be low probability if you take out this low over here. I would say that this is starting to look quite bearish if you take out this high, because a quadruple 1-2 with the last wave being the longest one and the highest amount of volume, not common at all. So that's when I would, you know, start prioritizing the weakness if you do take out this high at $89,000, you know, in the next coming hours between today and tomorrow. And I'm saying, you know, this is looking weak, right? Then I would definitely prioritize the triple zigzag scenario, which is this one right over here. And, you know, what I was explaining before as well, this is not a good double top in my opinion. This would, yeah, you could create that zigzag, which is shallow, and then it, you know, but staying real, usually your C wave usually extends a little bit more than the A wave. Okay, so this is what we're going to talk about right now as well, mainly on the lower time frame. Higher time frame, the bullish case scenario, looking at the 4-hourly time frame. Okay, there's two main scenarios that I'm looking at. The bearish one, which looks for me the better one, it just still looks a-okay. Highest amount of volume on this wave. You know, what I'm interested is in the movements down. And this is the largest one so far. Hang on a minute, I'm in the middle here and you don't need me anywhere. So this is the largest one for the moment right there. It's the longest one, and volume has been increasing on the movement down. We ain't counting the liquidation event volume, right? That's a special event. But as you get in this momentum to the downside, volume has been increasing, and your biggest wave has been this one right over here. Man, I'm not sure what's going on with my trading view, but it's not working as I want it to work, as usual. So this is the one that I'm, you know, technically prioritizing for the moment. The momentum to the downside still, and where this should reject based on Elliot wave theory is, in between the 236 and the 50% Fibonacci. 236 I always consider a very shallow, pullback. I prefer getting into the 382 50% Fibonacci territory. That's where it becomes interesting, and analyze the local waves to possibly look for some positions, right? To look for some entries safely, with very good risk management for, trying to time, if you can, with good responsibility and good risk management, the possible rollover. So yeah, now it's interesting. 382, 50% at just slightly below 94K zone. This is starting to get very interesting area where the price could reject, because if the price does get to $97,000, then we literally invalidate the wave 4. And if you have the largest move down with the highest amount of volume from the last few weeks that is getting a significant bounce, then you realize that, okay, maybe this, is the end of a possible move. And we could go sideways, right? Because when you try and detect, man, I'm trying to delete the drawing here, and Tradingview is just not working. So if you do get above that $97,000, you start thinking, okay, what kind of structure do we have here? What kind of structure do we have? You've got the wave down here, this bounce, the wave down here, this bounce, and this wave down. What kind of impulse could you have here? And when you get your wave 2, you connect it to your wave 4 in this case. If it had to be some kind of a diagonal, okay, you always connect. If you have 5 waves down and you start overlapping the golden pocket for the higher time frame wave 4 situation, which is this one right over here, you need to think, how could I build an impulsive move here to the downside? We'll get your wave 1 here and your wave 3 also. And you're saying, okay, this has to be some kind of a contracting diagonal, but your 5th wave is the longest, and that is not allowed. So that all of this is BS, right? When all of this is BS. It's not a contracting diagonal. You're connecting your wave 1 with your wave 3 and your wave 2 with your wave 4. And wave 5 cannot be the longest. So that there is no motive wave here to the downside because of this 5th wave being the longest, if you were going to label this that way. So if you were to overlap, this low, always when you have a major pivot low right over here, right? And you overlap with the bounce after the breakdown, what you label it is as a multiple 1-2. And then you got the 3rd wave, right? With high volume, that makes sense. But if this movement to the upside does overlap, already getting above $98,000, right? Which is overlapping this pivot low. A multiple 1-2 here, a 3rd 1-2. It is possible, but it's less probable. And the main reason why is because the largest move is your 3rd wave. And with multiple 1-2s, your 2nd, 3rd wave, you get smaller before you get the breakdown. Okay. And the 3rd wave being the longest one is not common, right? Let's say it's not common. And as technical analysts, we look at what is usually common, right, to see, and what is less common, you don't give it the highest probability. So if you were to move up here to get to $97,000, $98,000, you need to start thinking, what kind of a correction do you have? What kind of movement do you have from all-time high? What can we label this movement to the downside? And obviously there's, you would have to figure out some kind of a zigzag structure, which is this one right over here. Because, a double zigzag is a little bit too aggressive, and I can't find a proper 5-wave move in this area from that high. It's a very, very kind of 3-wavy. So I need to label this entire sideways momentum as a potential, you know, running flat or WXY sideways corrective structure. Because what is clear for me, at least on my eyes, is that this is the wave, impulsive, third wave in the middle. Okay, that's cool. And that's pretty clear. That's been an aggressive, impulsive move down. This has been a clear corrective structure. You know, this is a bit of a three waver also to the downside. You know, it's very much, you know, it can be a five waver, it can be a three waver. There are ways to fit in both scenarios here. And then you got this movement here. And then you got this being an impulse. This impulse was what we were looking at throughout last week. We're looking for that last fifth wave, which was a bit punchy. This is what happens with a fifth wave, guys. It can punch your stomach and move down a few $1,000s more than you expect, which is kind of what happened here. But you're looking for exhaustion regardless. You're looking for that reversal at some point with that momentum to the downside from last week. Because what we were pointing out here last week was, you know, this momentum. Multiple 1-2s. Largest move here with the third wave and choppiness 4-5s. However, the last fifth wave, you know, got a little bit of a punchy move down here. But that's literally it. You know, when you do take a look at this momentum to the downside, I mean, you are looking for the end stages. You know, basically when you do count this latest move, if you do get this pivot, you do have 1-2 here, 1-2, 1-2, third wave down. And then you've got this sideways momentum. You know, from this point, you're not breaking down successfully this pivot low. Fourth wave, fifth wave, that's the next wave down. And then sideways running flat scenario here. And then you break down the low. And this one was a little bit punchy, right? And ultimately right now, throughout the last few days, getting this reversal bounce. So, yeah, what we're looking at here, if we were to hit 97,000 plus, is a possible end of a movement down from all-time high as a possible three-wave structure in a ABC. This is not my favorite kind of, you know, B wave, sideways, running flat, WXY. There's a couple of ways of you know, analyzing this corrective structure in this zone. But what is mainly clear is the impulse down here, and this being an impulsive move down as well. So your A wave and your B and your C wave is clear. What is tricky is your B wave, which is usually tricky. B waves are usually tricky. X waves are usually tricky. It's just how it is. So obviously we need to get to 97,000 plus to consider this an end of a movement down from all-time high. Till then, you know, this has, for me, this has priority. This has priority for the moment till proven otherwise. And that's the interesting thing when you go to the lower time frames on the 15-minute. Getting a little bit of a movement up right now, getting a lot of shorts entering the market. Probably going to get stopped out here at break even. Attempted the double top. I would be interested in seeing how we're going to break up here in this zone. And yeah, look to re-enter some positions. So I want to explain how I'm going to, you know, basically see how the price moves up here. Obviously, we can lower high here, no problem. This is looking like a flatty structure, and you know, we need to figure out here, well, what can we look for, right? You need on the 15-minute time frame, I need to have a few scenarios. And Devil pointed out one to me today, which is pretty nice. It just to make you understand where I would want to position. Today, I wanted to position myself with a double top. And you may ask why, right? You want to know why. You don't want to come here to say, you know what, you know, just show me what to do, and I'm going to enter with you. I want to provide the education and explain, you know, why I want to enter. You know, the main reason of the double top today was if this is the sideways scenario, which, you know, this is like going in very detail. if this has to be the end of the B wave, and what we're looking at here is one more push up, you know, 1, 2, 3, 4, 5 scenario here, I am interested, as knowing that this could be the third wave, that you're looking here for your 4, 5, your last leg up. I'm interested because the biggest move on the 50-minute happened here. And usually when you get that bigger move up, what you're looking at is the choppiness on the fifth wave, right? Fifth waves can be, they can extend, they can push out, they can break out. But I'm interested. I'm interested because it gives me a good entry point. You know, it gives me a good entry. It gives me a good risk management to enter. And, you know, imagine here getting into short here. I'm not interested. Not interested in shorting here. This could still be very much a corrective structure. And what I want to point out here is, what if this has been the low, or maybe this one, because there are ways to fit. Yeah, as mentioned today, WXYXZ. Maybe this was a correction. This is a higher low, and this is a higher low. What if you have a double 1-2 here? What are you going to do about it? Do you have a plan? Do you have anything ready? You know, absolutely. Of course I do. You know, I've been studying this movement very carefully. So the scenario here is, if this is a 1-2, you got a little small 1 and 2 right there. That's what you want to see. Okay, maybe this is your third wave. This is your fourth. Well, okay. Well, you're probably going to get 1-2, 1-2. You know, couple of more 4-5s. I don't know how the fifth wave is going to develop here, but because we formed higher lows here, you always need to consider the chance. Yeah, why not? If we formed 2 higher lows from this pivot low, and your biggest move has been here, well, maybe you do form another 4, 5, 4 and 5, and it extends to 93,000, maybe 94. You just never know how that fifth wave is going to develop. But what is more interesting here for that double, triple top is, if we break this local high and we continue the momentum, then I'll analyze the 5-minute time frame and this wave over here to try and spot that ending structure and check the resistance. If we don't double top here, right? You need the rejection to take a decision. If you don't take the rejection, and just let the price go a little bit higher, right? Why not? There's always the scenario of forming a lower high right there, and you know, this is what happened, I think, to many people that, you know, attempted shorting and was defensive at the $116,000, right? Because this area was, it does happen as well. Sometimes you just need to put your stop at a loss and don't be too defensive. This happens to me a lot of the times. I'm very, very defensive. I like to protect my capital, right? I'm a very, very defensive trader. I've lost a lot in the past, and I've learned being very defensive. Of course, being very defensive, sometimes you lose basically major profitable moves. You know, price action does go in your favor, but you get wicked out of the position. And this is basically what happened back here. I do know people that, you know, missed this high. Basically, it's okay shorting later on. There were a lot of shorts to be taken throughout the previous weeks. In November, we talked about many. We talked about one right over here at 107k. This very likely being multiple 1-2s and rejecting at 103 and coming down below 99k. So, but I'm talking about this one right now. Okay, it doesn't matter. But I'm talking about this specific one at $116,000, where you did swing failure pattern from the lower high here. And look at this, you know, like cheeky, getting almost to those highs. And anybody that was defensive here obviously got wicked out, right, at break even, and the price left without them, right? Unless you positioned yourself later on, you know, which is obviously possible as well, right? I'm just talking about this cheeky wick to the upside, which it does happen as well, just as we can see right over here. And I understand that this could happen right over here right now, where you just get that wick to the upside, and anybody that's been defensive, such as myself, you get wicked out. And you just have to enter later on a sign of weakness, unless you break the highs or create another double top so I can get another re-entry with a good risk management, or break through here. And if it does break through, it is an interesting lower high, I have to say, but I haven't got that much confluence at just at the above 92 here. There's a pretty nice higher time frame you could arguably discuss, lower high right over here, sitting at $93,000. So you do have a nice SFP level right over there, which is I would say it's acceptable to claim some liquidity above some lower highs and then get the rejection for a possible entry. So I am considering that level if I'm awake and I'm around. But if you do break the local highs, I haven't got much levels here. Yeah, it's also the yearly open as well. That's interesting. That's what the yearly open or previous year close, 2024, right? If you want to take a look at the yearly chart, we ain't going to do that right now. The yearly open is at 93.3K, maybe 93.4K, depending on what exchange. And that's where we actually got resistance on the 18th of November, and we actually got supported, right? It's pretty nice to see. That is the yellow horizontal line. It's the yearly open or previous year close, if you wish. And that's where we got a bounce. That's where we got resistance. It is a major level. It is a major zone. It is nice to see these lower highs where the yearly open is, obviously, basically proving that this zone is resistance. That automatically gives me some interest of sweeping up this high if it is going to go up there, and taking into consideration a liquidity grab beneath one of these two lower highs, which is sitting exactly where the yearly open is. The market wants to sweep the people out and then go, right? So that is the tricky part right now. It is bullish, and we're probably going to chop the highs a few more times. It's possible, right? And I need to take that into consideration when we do the micro counts, right? Because what is our job is to try to figure out where we at, right? I'm trying to figure out where we at because nobody has a effing clue, right? You can have some ideas and some projections, and if you do manage risk and you do know how to position yourself, then you can, take advantage of the possible move, either miss it or be defensive. I'm a defensive trader, so I miss many moves and I get stopped out at break even a lot of the times, just because I'm defensive. This market is ferocious. If you hope for a reversal, or I would get the analysis. My favorite scenario is rejecting at this zone without hitting $97,000. But what if I'm wrong? Right? What if I'm wrong? Which I'm wrong many times. I'm right many times, but also wrong, right? Let's be honest. You can't be 100% accurate. Nobody is. So it's all about risk management. It's all about positioning yourself. It's all about understanding the different possibilities and where is your levels of interest to maybe reposition yourself. As mentioned, if we break the local highs and maintain above those local highs, I will attempt a double top. Only if we double top. If you'd see my entries are they are below. They are below after hitting the highs. Then they're never above. They're never above. I don't try and catch the high. I need the rejection to enter the position. So this is why I very much vocal about it. You need to trade the chart that you have, right? The chart that provides you the rejection. If it does get rejected, I am going to enter that position. me personally. If we don't, yeah, guess what? This is a no trade zone for me. I'm not interested in doing anything here unless I have a very clear 5-wave move, and it's, I'm really spotting that 3rd wave in the middle, 4th 5, and maybe attempt that short if you get a little bit of exhaustion, right? Something like this, where you have a 1 2 3 4 5. Okay, that's looking interesting here, to try and spot that exhaustion. Double tops here are interesting because the big wave already happened, right? If I see a local big move on the 1-3 minute time frame here in the middle, maybe I would speculate on that. But to be crystal clear, if we break up from here, I'm not going to short, I'm not going to add, I'm just not going to do anything unless we get to that lower high right there, which for me is an acceptable SFP, which is slightly below the yearly open. Why not? It's a liquidity grab zone. It's a good zone. I like it. I think this is an acceptable swing failure pattern level. And the main reason why is because you have the yearly open just slightly above it. So you might just tap it as well. I would consider both of these levels an acceptable swing failure pattern entry. What you need to do is just wait for the price to hit the level. If it doesn't hit the level, then it doesn't hit the level, right? Then we'll look for other shorts down here. But you kind of need to have a few plans, right? We need to have a few plans. And obviously the most important plan is risk management. That is, the best strategy is your risk management. That's the best strategy. It's proven to be like that. It's your brain. It's how you act. And if you don't have any plans and how to execute them, you eventually fail. And obviously you can have emotions. You can be very, very good by planning setups. It has happened to me as well. And screw that. I'm not going to wait for this level. we're going to reject here at some point, and I'm just going to put a few cheeky long positions, right? Short positions at this zone, right? And, hope for the best. Hope that we do not break above the zone. But, eventually the market will catch you. The market will catch you. It always does. It always does, right? You guys know, right? We'll just put some limit shorts, because it will reverse at some point, right? And, this ends up being a multiple 1-2, and the volume, the 3rd wave it's not even in at the moment. It's getting developed, and it's going to pop out with big volume. Then what are you going to do with your positions underwater when you're looking for 4-5, 4-5? We go to 100K, 1-2, 1-2, 1-2, bang, 3rd wave. Volume is increasing. You're in danger, you're in underwater, your trading is crap because you just didn't manage your risk. You don't want to do that. The market will catch you. You're going to get in a few good positions. It always happens, guys. You know that. You know that, I'm sure. 99% of you know that. So this is where the 5-15 minute time frame becomes very, very interesting, based on looking at the internal waves, right? And as explained, I understand there is a bullish case. You always need to understand, if you're looking for, if I'm looking for shorts in this zone, I always need to understand that the market could blast off, right? It could break through the levels. It could break through the projections that I have. It could just do that. So, yeah, basically, you need to have a plan, right? You need to have zones where you're not interested in being in that position anymore. And for me, it's pretty damn clear, in this area, unless I see very clear exhaustion on the lower time frame, I'm not going to position myself in a short. It's just not going to happen. Why? There's lots of resistance. You talked about the wave 4 on the higher time frame. It has to reject because we are downtrending. You know, for the people that are looking for bearishness and you know, possibilities of moving lower, right? Yeah, but there is a bullish one. There's always a bullish case. There is always a possibility of a bullish scenario. You just need to accept it. So you need to manage your positions, right, in this case. So this area in between 92 and 93k, I'm actually not interested. All right, I'm not interested in positioning myself unless you wick the highs and I can enter here, have a stop loss just at the highs here. And remember, if it does reject successfully, I have a great, you know, it's just a good entry and a good stop loss. If it does reject as a double top, stop later on, close to break even, keep it as a tight loss. But if it breaks through, then you know, kind of not interested in the zone, unless we, you know, then I'm looking for an SFP from one of these lower highs, unless we double top here, triple top in this case. So yeah, that's basically a little bit it. If we break up, then we go higher, right? And whoever's positioned from lower, then great. This is actually interesting, you know. These movements that we've had have been quite interesting to position yourself. Also, this zone over here throughout the last 1 to 2 days. I was talking about a possibility of a flat here, but also, you know, depending if we're going to create that choppiness and lots of overlap structure, you realize by this point of the momentum that this is not looking impulsive. Even though you got a 5 waver, you can't count an impulse here, because it would have to be an expanding diagonal, because you're connecting wave 1 and 3 and 2 and 4, and your wave 5 is the smallest wave compared to your 3rd and 5th wave. So you understand that this you're looking either for a sideways WXY, or you're looking for, I don't know, but you're not looking for a motive wave to the downside. So you understand that you got a good chance that the highs are going to be taken here, based on that information. And you know what the beauty about, you always want to try and position yourself at the first couple of 1-2s, right? Because if this ends up being the end, let's just clear this chart right at the moment. If this ends up being, out of speculation, legends, I'll go through the comment section right away, but what if this ends up being a 3 waver, right? ABC running flat or WXY, it doesn't matter. You know, this ends up being the low at 80k, and we actually go to 100, 105, 110, right? Maybe in the next coming days. And this movement to the upside has been multiple 1-2s. And, you know, you're just going to create higher volume now to the upside, and it just continues moving up and breaking resistance. If your guidelines are broken, then you just let the price go to the next resistance area, right? The next bigger resistance, let's just speculate, because when we talk about resistance and levels for a possible SFP, they're guidelines. They are guidelines. That's how I treat it, guys. I treat it as guidelines. If we're trading above it, I'm not entering a short. If we have a little reaction, I got an entry and I got a stop loss above the high. If you break above it, I'm not shorting. So if you were to break these lower highs where we have the yearly open, the next big major level is actually the anchored VWAP from that lower high of the 27th of October, which is sitting with the 50% Fibonacci. It's pretty damn close to the 50%. Well, it's actually quite far away. 50% Fibonacci is where we have that lower high here. I would treat that 50% with that lower high, also where we have the yearly open, preferably an SFP. I like it because we got 50% at $94,000. right over here. I like that pivot for a liquidity grab because we have 50% Fibonacci. And obviously, well, why 50% is so important? Well, it's basically the area where you would want that possible wave 4 to reject on the higher time frame. So that's the level that the next level that I would be interested in, 94K, if you break all of these levels. And the thing is, you should be obviously looking for, this is hedging as well. The market is downtrending. Could the low be in? Absolutely. It's always good to be positioned for higher as well. It's always good to be positioned. I'm probably going to get stopped out from that short, which was an acceptable double top as mentioned today. Probably getting stopped out almost. Also increasing your position. If you traded in a long and you're looking to short and you've taken profits from your long, it's always good to kind of increase as you're looking, because your long position should be a hedge as well as you attempt some shorts, right? I'm interested in getting into a big short position in this zone, and I want to catch the high. If I'm in front of the computer, I want to catch the high, and the way to catch it is double top or perfect reaction at one of these levels, right? As explained, one of these ones, I'm looking at them. I'm looking at one of these ones right over here. Hang on a minute. Why is this one here? Don't need that. Got yearly open. I like it. It's just where we have those lower highs. Yearly open right there. Just above that lower high. It's in an interesting area to take as a guideline. I want to try and short the high, catch the high. But obviously, if you need to be in front of the charts, have some alerts, know how you're managing the position, and just wait for the level to be hit, right? And reject, most importantly. Price needs to reject from it. You will never see me in a position at an exact high or an exact low. You're always going to see me, if you see me in a position based on double bottoms and double tops, with the entry beneath the rejection. You're never going to see me with a position here. Never, ever, ever. You're going to see me with a position above the highs. Never going to see me in a position there. You're always going to see me in a position beneath, somewhere in this area, somewhere. Obviously not down here. You're late if you're getting into a position here. And in this area, a bit of choppiness. That's a good entry, good stop loss at the high. Risk management. If this decides to roll over, I'm risking $300 here. Right? I'm risking $300. And if the price rolls over from here, well, you do the count, right? If we're looking for a take profit down at the low 80K levels, I'm risking $300 for, maybe 20K if it ends up rolling over aggressively. I can get stopped out once, twice, three times. But when it does roll over, I'm making all of my stop losses, right? So it's important, guys. It's just I'm just sharing here how I literally look to position myself, right? Because if you break above the highs, I don't have much resistance. Between the local highs. I'm aware that if we do count this as the low, because you form two higher lows right there, even though they're very shallow. If it's a 1 2 1 2 and this is your third wave, you got running flat here in your fourth wave, very possible. I'm aware of a fifth boom support, another fifth wave here, just because you have 2 1 2s. If the price doesn't double top here, instantly and you're trading above the level, I'm not going to short. If we correct down and we get another bounce, just because the highest amount of volume has been in this movement, I want to attempt the fifth waves at specific levels of resistance. In this case, we got that lower high over here from the 20th of November, yearly open. You might see me positioned in a short position if the price rejects from this zone. You might see me in a position tomorrow here and stop loss here if we do reject from this yearly open in this SFP. But you're not going to see me in a position here. You just need to have these levels as guidelines, right? You're above the level, then the trade you don't take it, right? And you need to have really, really strict rules here based on the risk management, guys. So you have common sense based on levels, liquidity grabs. Does it make sense for the price to actually reject from here or blast through? Do you think I care? I do care, because I know people don't know how to manage risk. People can be, this could be misleading, and I do understand that can be misleading. That you said on your channel, based on the analysis, that your favorite scenario was going to be the bearish one, where you're looking for a lower high, right, between the 382 and 50% Fibonacci. And, golden pocket is the invalidation. And, then we wake up tomorrow and we're trading at 100K. And then obviously, we're going to get the hate, as in, it's my favorite scenario, unless I'm proven wrong. And this is where risk management comes into play, right? This is for the moment, the interesting zone of rejection without hitting 97K. And, then you need to create your local plans and your local risk management, right? Your risk management to position yourself. And I'm just sharing a little bit on how I would position if I'm going to be awake and not asleep. I like this SFP. I like the possibility of this being the low. 1, 2, 1, 2, 3, 4, 5. Maybe going to get some cheeky couple of 4, 5s here, because you can have a couple of 1, 2s in this area, right? So you really need to map the situation on, what is the possible outcome if you don't top here. Well, you can have one more 4, 5 or another 4, 5. Right? And it does get to 93, maybe even 94K. You need to have your levels of guidance with that. If the price trades above, you need to understand that this is breaking major resistance, and maybe volume kicks in. And at the end of the day, we were just breaking the bearish downtrend. Right? Because I don't know what's going to happen, guys. But, you can have a hint, you can have some ideas. You can say, for the moment, it's looking pretty damn juicy for, a double zigzag. Of course, would I consider a corrective structure here? Say that we do move down and then we move back up again. And you're like, hey, I thought that, the scenario here was already finishing a double zigzag. Well, then you need to, if you're going to form a corrective move down here in the next coming hours between today and tomorrow, you need to have another plan, right? What else could happen? Well, maybe this has been your zigzag up, and maybe all of this has been your X wave, right? So maybe this has been a sideways WXY or a kind of a running flat, and this has been your X wave right over here. And then you're like, hang on a minute, well, if that's been your X wave and this has only been an impulsive move, right there. You only have one wave here. You still need the A, B, C here. You still need the zigzag. Because in a double zigzag eventually, right, what you're looking for is the zigzag in W. Your sideways complex corrective structure, always a wave X, not always, most of the times, is very, can be very, very complex. And B waves as well. B waves they're horrible to trade because B waves, they've got such a big range to retrace to. 382, it can get above the start of the A wave, right? B waves are like, unless you're looking at the lower time frame and you can position yourself because you can detect that this is corrective, then yeah, maybe a lot of people are long from this zone just because it's, it looked very, very corrective. But if we were to chop here and correct and we take another leg up, you're like, what happened, right? Why aren't we rolling over? I thought this would be the end of the Y wave double zigzag. Well, then you need to, start implementing a plan B. And maybe you do create that wick up. You sweep up those lower highs after the correction, and then you roll over. So you really need to go through the waves and the possibilities here, right? So maybe this is the double zigzag. Yeah. I wish trading was easy, right? If it were easy, then everybody would be making, a lot of money, right? But it's not, right? So anyway, on the higher time frame, it's still what I would be prioritizing. You always need to be aware of the breakout. You always need to be aware of what if this has been, it's a zigzag move, even though the fifth wave here looks absolutely horrendous. Sorry, the B wave, not the fifth wave. The B wave here looks horrendous. Running flat situation, sideways WXY. This is a clear impulse. This is a clear impulse. What is a bit of noise, where there's noise is here in this sideways momentum. But you need to think about, well, it may be there, no, maybe what if it is the low, right? And if it is the low, what you're building up here is multiple 1-2s. So anybody that's looking to short for a lower high based on the bearish case always needs to be aware of the bullish case, because that's what's going to protect you. You need to be pretty neutral in the market and have very good risk management. There's a lot of people that they are overconfident, and it does happen to me as well, guys. You know that. Sometimes I'm very confident, can get a little bit cocky, but so, we are human, right? But sometimes, you need the market to humble you. You need to have your feet in the ground and just realize, there is a bullish case. This could be multiple 1-2s, and it just snaps out of here and pumps, $6,000-$7,000. So, you always need to be neutral, pretty neutral. Understand your trading plan, how you want to position. I like this liquidity grab. We've got the yearly open, right? Everybody's different. We can have, similar analysis, but everyone's different at the end of the day, and everybody positions themselves differently, right? So anyway, it's time to go through the comment section. Okay, time to go through the comment section, guys. Just, we like to do this chit chat overview, just sharing a little bit of how I like to position myself with my risk management. And at the end of the day, it's you, right? It's you. You need to learn. You need to have your knowledge. Learn about, Elliot wave theory is great. The levels, how the market structure moves. All of these different tools, RSI, oversold, overbought, delta, all of this helps with a bit of information, but don't get clogged up with 30 different indicators and stuff, right? I don't have moving averages, you know that. It's just information that I don't need. And obviously create your own plans and most importantly, work on your risk management, because that is the main flaw in trading, right? It's the main flaw. So yeah, anyway. I do get messages sometimes of people saying, thank you, I've improved my trading a lot, which is, it's nice to see. Andy, the bigger you get, the more haters there will be. Tune them out. Better yet, just block them. I love your safe, conservative way of trading. It's healthy and more effective in the long run. Yeah, I mean, this is the thing. This is the thing, you know, I don't make millions every month, guys. You know, there's a lot of weeks where I just pretty kind of break even and just haven't made much. But everybody's different, right? Everybody's different. Trading is like really... And you know what? The more you make, at least for me anyway, the more I make, the more conservative I am. It's kind of weird. It should be the opposite, right? The more you make, the more aggressive you should be, right? Well, I'm a little bit of the opposite. I get very conservative when I'm doing well. When I'm doing well, I'm like conservative. Anyway, long or short, Staffer One, much love to you, brother. Today is Thanksgiving, and yeah, basically, the markets are closed, a little bit slow. Bitcoin did get a nice little jump, but I think maybe tomorrow, Friday, we do get a little bit of action. There's no news, there's nothing. You know the plan here, guys. We just need to be aware of the bullish case. But just be aware that also this is the rejection zone. It's where you're going to get lots of people shorting. We can see it on the Delta. We can see it on the CVD. People like to short, try and catch the high. I like to do it, but I like to, have my levels as guidance. I don't just randomly short and add to the position. Wait for the levels to be hit, as explained. Yearly open, lower highs. Look at the lower time frame. We've got maybe one or two 4-5s to develop. If you break the local highs, wait patiently till we hit the yearly open in this lower high right over here. All right, 50%. But this should be the zone of rejection if we consider the downtrend, where the highest amount of volume has been in this latest move down of the last 2 weeks. And you always, when we talk about Elliott wave theory, when you have the biggest move on the higher time frame with the highest amount of volume, you always prioritize it as a wave 3 until you get the momentum. And if you want to catch the long for the possible wave 4 bounce, and it's maybe not a wave 4, and this has been the low of this 3-way structure, the best thing to do is go to the lower time frames and go to the 15-minute time frame, basically, right? And well, 1 hour, 15 minute, and this is what we were talking about last week. However, it punched down a few more $1,000 than I expected, and this is where the end game based on last week was looking at me. So I'm trying to get my wording right here because I don't want to talk about you, we, it's me. The end game here yesterday was looking for the ultimate choppiness to get exhausted, and this latest 5th wave was a bit punchy, I have to say. It was a bit punchy, but you're looking for the last 5th wave here. How is the last 5th wave going to be? Will it break down several $1,000s, or will it break down 1,000? And that's the tricky part, right? The last push down before you get that reversal. Could it double bottom? Absolutely. Could it break down $5,000? Yeah. So, then it's when you go to the 15 minute time frame and really try and detect here and where to position yourself safely, right? With good risk management to try and, catch the low, which, is very, very challenging if you don't know how to manage risk, right? You don't want to get trapped here on trying to catch longs and adding to the position and suddenly you're risking 50% of your account. You don't want to do that. Don't want to do that. Don't want to do that. Rather get stopped out with a very, very small position and then look for the next level, look for the next, major, next plan that you have, right? So yeah, this is what before, you know, I got the strike. Well, this is what we were looking at, right? You know, we're looking for the last move down here before we possibly get the reversal. And it's your, you know, it's your mission to try and detect, right, where are we going to stop here. And, you know, I have to say, you know, this did break down a few more $1,000 than I expected since we were trading in this zone. It did break down a few more $1,000 than I expected. I thought 86, 84 was going to be the lowest range, and it just got another push down of a few $1,000, which... But at the end of the day, you know, we're looking for the price to reverse at some point, purely based on the movement down that we had from this high on the 11th of November. Because this didn't change. Nothing changed about the reading of this movement down. You know, you're trying to spot the latest 4 5s, which is true about the possible 4 5s that could be formed here, right? You just don't know how aggressive the fifth waves can be. Maybe this is going to be 4 5 4 5, bang, right? Hits 95k and then it rolls over. You know, or maybe it's going to be very, very shallow, very tight. Just, you know, you get the deal, guys, right? You need to have the levels ready, have the liquidity zones. The yearly open looks interesting. I would be interested myself in positioning myself if the price rejects from this lower high or either this one, because we have the yearly open or previous year close as what provided resistance last week. Right? It bounced, yearly open bounced as support. It rejected as resistance. Why not sweep those lower highs and then move down, right? Kind of makes kind of sense, right? So yeah, it's something that I am paying attention here. Anyway, let's go through the comment section. I think it's about time. It is about time to go through the comment section, right? Or not? What do you guys think? What is interesting as well is the lower time frames. Man, if you know what is a level where you could get a possible bounce for all of those intraday scalpers, this higher low, the inefficiency, the lower time frame wave 4, you know, the fair value gap, if you wish. This is an area where the price could, you know, get a little liquidity grab. Fair value gaps, well, you know that, right? Maybe a lot of people do know about fair value gaps. You either lose it or you hold it, right? So the thing about these fair value gaps, if you go through the higher time frame, right, it might be the case about this fair value gap on the higher time frame, right? This is the same explanation from $116,000. Look at this daily candle. Okay, pretty significant fair value gap from that low right there, right? It was about a $5,000 fair value gap. Big move down on the daily here. So, you know, this dead cat bounce, there's two scenarios. You either fly or you tap the start of the fair value gap and you reject. And, you know, the good thing about this, it happens on the lower time frame as well. This is the daily. Oh, I can find so many scenarios like this, guys. You know, this is one of my favorite kind of strategies. Based on a wave 4 ABC 3-wave structure, right? When you take a look at this as a 1 2 3 4 5 ABC wave 4 fair value gap, roll over. I really like these ones, and you know, you could just arguably discuss that you got one right over here on the 5-15 minute time frame. So and it's not saying that it's going to happen. If we come down here we're going to bounce. No, absolutely not. It might bounce. It is usually a zone that can get a bounce. How do I trade this? You know, you literally need to get some kind of a reactionary zone and put a stop loss right beneath the low, and then just attempt that bounce possibility, right? So you don't want to. I would not want to add to a long position anywhere in this zone with this gap here with no volume on the session volume profile. There's no way. There's no way I'm gonna, I would want to add to longs here just because I understand it's dangerous. So yeah, you got the point of control as well. The point of control is there. If you lose point of control on that low, it's a zone where there's no volume. There's a big move up. It either bounces or it does not bounce, and it nukes back down to the value area low or to these lows, right? Or you just don't know how aggressive it can be. So, but if it has to bounce, this is the zone where it has to bounce. If it doesn't, there is a big risk of moving down here. And if it bounces, it might be a shallow bounce and then it rolls over. It might be a big bounce, but this is basically how you manage the trade. But the entry is there. The entry is there. The entry is there. So it's just about positioning yourself. Sweep up the low. It's like an SFP on the 5 minute or 1 minute if you want. And you need to give it a bit of a breather of stop loss. This is like for scalpers, I would say you're targeting, you got point of control here slightly higher, but session VWAP is always a major target for scalpers. But anyway, it is kind of a strategy, this fair value gap. So that's an internal move that you could speculate on a bounce. Maybe it bounces $500, maybe enough to make a few bucks. Get enough for the weekend. Anyway, let's go through the comment section. Trading education does not get better than this. Devil, my man, thank you very much for joining the stream. Much love to you. Yeah, it seems like, I think because today's Thanksgiving and markets are closed, not too much volatility, but man, today's video update, guys, go and check it out. I just talk about the scenarios and levels and possibilities. I did talk about double tops are looking interesting for me. We did create a local double top. It just gives you a good entry position. Anyway, Devil, much love to you guys. If you don't know who Devil is, he's an absolute legend. Go and subscribe to his channel because he provides insane education every single day. Also very similar to me, a lot of Elliot wave theory, same levels, same scenarios, very similar way of reading the market and having these trading ideas. Bye Andy, have a good day. Shazan, much love to you, my man. Much love. Guys, because of all of this YouTube stuff that happened for me, I'm looking for alternatives. I know Rumble is a scenario. Not too much attention, right? YouTube is the go-to place for videos and streaming. I don't think Twitch is much of a place for that. It's more for gaming, right? But maybe. But I know Rumble is going to be a scenario. But all of this thing about censorship, and I am testing a platform, a decentralized platform right now, which is pretty awesome, which is Velto, guys. This is, basically I connect my wallet and there's no third party, which is, I'm really going to start transitioning. I've been testing it out. The liquidity is pretty good. We know Hyperliquid has been pretty good, and Velto is, coming up pretty strong. And I think it's, at the end of the day is the future, right? Decentralization is the future because, it's safer for the people. right? And what we want for the people, for the community, is things that are safer, right? Decentralization, no middleman that can, cut you off, which happens consistently in this centralized world. So, Velto's pretty cool, guys. I've tried it, I've just tested it in the last few weeks. Liquidity's pretty good. It connects to your wallet. It's not a centralized zone, right? So I just don't know how to say it. It's not a centralized platform. It's a decentralized platform. And I'm slowly, because we know that the bigger exchanges, eventually they have more liquidity, it is true. But I think it's slowly going to get some attention. I know Hyperliquid got a lot of attention, okay? And it's gained in liquidity. But man, this one is, I think, I'm slowly going to transition in the next coming months to decentralization, guys, okay? Slowly testing out. If anybody wants to test out, let me know. You got the link down below as well, to go to directly to the platform. Okay, just so you know, it's the legit one down below, Velto, guys. And I've been testing it out, works great. And you just connect your wallet, which is no middleman, guys, which is obviously is the future, in my opinion. Okay. Right over here, you do have Velto, and I've been testing it out. And, I think slowly we're just going to transition. I'm going to transition into that, guys, because I don't want no middleman for anything, for video streaming, for banking, for whatever, right? For trading. I just don't want middlemans in the middle that can, screw me up. So yeah, it's just a good way to diversify. Of course, you do have the affiliate links down below, guys, for all of the different platforms. I may earn a bit of a commission but because of that. Bluffin is still great. BTCC is still great. And, I obviously use Bluffin as well. Bluffin is, very, very, very cool platform. Very legit for the moment, right? You just never know. But I'm using it. Works great. But I'm going to slowly transition, guys. I've had it. This YouTube thing has opened my eyes. Really has opened my eyes. And, you want to step away from any middleman slowly as we do go into the future, because just some things that you really take into consideration, because it pissed me off, guys. Pissed me off, this whole, and they haven't told me exactly what went wrong, what I had to change. They just say it's dangerous or harmful for your viewer, and what is dangerous or harmful? Screw you. Why are you doing this? Tell me exactly what is harmful or dangerous, and we can talk about it. Tell me what needs to be improved. They just, it's harmful, dangerous. The AI system, detected it, and that's about it. No. Anyway. Man, Crypto Cow. I mean, this is the thing with Jason Casper as well. It's Blowfin. Yeah, I know. It happened to Fefe too. Yeah, Fefe also has been getting strikes and warning. And the Bitcoin family, Diddy Taihutu, he's a pretty cool guy. He also got a few strikes the last few weeks. There's been quite a few people that have been targeted. But the main reason why, based on Bluffin, not Blowfin, because Jason Casper was saying this, also, he says Blowfin. Love Jason, he's great. Love Devil as well. So yeah, the main reason why it's Blowfin, the main reason why it's not Blowfin and it's Bluffin, it's because it's blockchain finance. It's blockchain finance. Okay? It's not blockchain finance. That's where they got the the ticker symbol, right? You would say that's where they came up with the idea. Because I spoke to the CEO of Bluffin, and I asked him, where, what's this name for this exchange that you have? Where did you come up with the idea of Bluffin? When I met him in Dubai here, I think it was a couple of years ago, 2023 maybe or so. And I asked him, where, what's Bluffin or Blowfin? And he said it's blockchain finance. So it's Bluffin, blockchain finance. So anyway, that's where the name came from. So it can't be Blowfin. It has to be Bluffin, blockchain, Bluffin, not blockchain, right? If we're going anywhere here, anyway, enough of that. Much love to you, Crypto Cowboy. Seems silly, right? Discussing the name of Bluffin for 2 minutes. But yeah, I discussed this with Jason Casper as well. Because he's saying, why are you saying Bluffin, not Blowfin? Because it's blockchain finance. That's where the name came from. Can anyone tell me what happened? Much love to you, Suzanne Yakisawa. Staffer one, my man. Much love to you. Bro, BTC long, yeah, short, bro. Long or short? Yeah. I'm interested in shorting. I'm interested in repositioning myself unless I'm asleep and the price just kind of moves up and then it moves up again and then it rolls over. If I'm not awake to catch any of these levels, I'm not going to put limit longs and go to sleep and hope for the best. I am aware of a bullish case scenario. I am aware of the price breaking out in a third wave. I don't know. I don't have a crystal ball. I wish I had a crystal ball. But a multiple 1-2 and the third wave is getting developed. It is maybe a scenario. Maybe the volume starts kicking in here. It's not about knowing, it's knowing where to position yourself, right? If you think, if the price rolled over from here, do you think that I knew that this was going to be the exact lower high? And I'm going to come up and say I'm a genius, I catch the high? No, it was part of a plan of trying to get into the double top, right? Right, it was part of a plan. I don't know. I think the price could hit the highs. Maybe it is the high, right? Could it be the high? Absolutely. Why could it be the high? Because it could be. Let's get this off the way. Why could it be the high? Because maybe this has been your. Hang on a minute. What's going on here? ABC. There we go. Maybe this was the low of your ABC. There is a way of fitting here, a tricky sideways WXY right there. I like it very much. Zigzag, flat and flat. There's a tricky way to see this as a corrective structure. And if that were to be the end, I mean, this could be the end. Why not? Why not? It could be zigzag up. Wait, I'm getting my stuff here wrong. Oh yeah, there we go. Thinking. Sorry, yeah, where this. I'm getting really confused at the moment. Zigzag up. Oh yeah, there we go. And sorry, the X is here. Man, it's getting late. It's getting late. But anyway, yeah, obviously your B wave being a WXY, because I was getting confused right now. Anyway, maybe the high is in. Maybe the high could be in here, because what we're looking for is 1, 2, 3, 4, 5 in this zone. Interested in double tops. Maybe this was the low of the B wave of this zigzag. Maybe I'm interested in local double tops here. Maybe this was the low. Maybe this was the low. Maybe this was the AB. And because you have two higher lows right there, maybe this is 1 2 1 2. And this is the third wave. You still need a 4 5 4 5. And then you roll over. So you get the deal, right? You get the deal, legends. We have our levels. I have the plans. I'm interested in an SFP from 93k if we do get up there. If we don't SFP from this local high, this is a no trade zone for me. It's either double top or you break through, then I'll look for the next level, which is 93k, where we have the yearly open. That's the zone, right? Amigos, thank you very much for joining. Devil, much love to you, brother. Thanks for smashing up the like button. Legends, smash them up right away. Crypto Cowboy, probably going to get some more action. Don't blow anything. See you at Professor and Legends. Staffer One, much love. Guys, take care. I prefer the scenario of the price forming a lower high in this region. That's my preferred scenario eventually. I am aware of the price breaking out. Multiple 1 2. I think it covers the lower probability for the moment. We are still downtrending. Still lower highs. Bigger volume in this movement down. For this to be an ABC doesn't fit too nice. So, I am looking possibly for a lower high in this 91 to 94. 90, stretch it to 95k. Just be careful for any big moves up. Just don't want to be positioned if we break above the yearly open and get a major squeeze to the upside. Manage risk accordingly, guys. If you do get into any positions, remember you got affiliate links down below to support the channel. Test out if you wish. Velto, I've been testing it out, guys. Decentralized platform. I am moving to a decentralized world in the next coming months. Much love, and I'll see you tomorrow in the update. Thank you for joining, and I'll see you tomorrow.